With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
What a spectacular day.
Sorry to bust in on the ladies' show, which was fantastic last week.
It was good, wasn't it?
A lot of giggling. Way too much giggling on that show.
Yeah, I didn't.
I didn't hear you guys talk. All I heard was giggling the whole
I'll wear a shirt next time.
No, that was good.
Dora's here. Frank is here. Yep. Paul is away. Beautiful day. Shall we get this out of the way?
You know, I remember you did your 50th birthday.
Yes.
You were away one weekend.
Yes, I was.
What's Paul now? 4 weekends he's been away? 3 weekends? Like,
well,
boy,
50,
he's celebrating.
50 is different for everyone.
Boy.
I think it's great. Take all the time you can. It's 50. It's a big number.
It is a big, big number, Paul.
Yeah.
Yeah.
Looks 60, but...
Frank and I have enjoyed a bigger number, but...
Well, I'm halfway between you and Paul, so...
Shall we get this out of the way?
What's that?
May the 4th be with you?
May the 4th be with you, yes.
Very good.
I didn't invent that, believe me.
Cinco de Mayo tomorrow.
Cinco de Mayo. There's lots going on this
lots
weekend.
going on. Actually, I'm the Heart Institute is having a pickleball tournament at Lansdowne that I'm going to. So I've never played pickleball.
Are you playing?
I am. I've never played, so... Embarrass myself. Oh. I think I'm going to wear a Paul Rushforth T-shirt and just pretend like I'm on the Paul Rushforth team.
Yeah. I played golf for the fourth time ever in my life this week. I joined a ladies' league, and they were gracious and kind, and I played better than I thought I would. But
what's better than you thought you would?
Well,
I mean, she shot a 72
on a 9 par.
In 9 holes.
On a 9 par.
On a 9 hole. I don't even know what.
You did a little golf too, didn't you?
I did. I was lucky enough to be at the conference last week in Scottsdale, Arizona, and I, again, very, very fortunate to play TPC Stadium course, which was a dream come true for me because you watch people play on that course, and then you get to experience it yourself. And actually, I surprised myself and played very well. But again, that's the difference between, I go to a lot of tournaments during the summer, and a lot of them are for industry and charity events, and your phone's going off the whole time, and you don't play as well, where this was on a Sunday afternoon, no phone calls, no nothing, turned the phone off, and played extremely well. So
no excuses.
No excuses.
No phone, no excuses.
Yeah. No phone, no excuses. So
it's liberating, eh?
Had no choice but to play well. It was fantastic.
Did you play from the tips?
Did not play from the tips. I'm not
familiar with that term, but that sounds...
No, that's the furthest you can go.
For the pros, Steve.
Yeah, for the pros. No, we played blues, though, which was pretty good. So, yeah. It was fun. Good conference.
You had a conference in between there, too.
There was a conference there, too. Besides the point that I got to see, I showed you guys Michael Bublé happened to be at the same place that I was at, and so that was awesome. But we did do some business during the day, and interesting to hear, and now it's gaining more and more steam, the economists that are so sure the Bank of Canada, if they're not dropping prime rate in June, it's happening in July. It's almost a virtual.
Are these the same economists that said it was going to come down 4 times this year and are now saying it's coming down 2?
3 now. Most of them are 3.
Well, I'm reading 2.
Yeah, most that I'm hearing is 3, and only because we saw the U.S. job report come out yesterday, and it was still good, but weaker than they anticipated. Yeah. That's the first starting sign. This Friday coming up is the Canadian job report, and then the inflation report is the week after. So we've got 2 very important reports that are coming out, and those reports will really at least in my opinion, pave the way for a decision on June 5th. I think it is June 5th.
Yeah.
And more and more it's looking like we might see our first rate drop on June 5th.
Do you think it'll be a material drop? Like, is it going to make enough of a difference in price point, or is it just going to be perception, right?
Well,
perception
to begin with, I think it's perception.
Confidence to give.
I think it's perception to begin with that we finally started going the other way. So historically, when they start, they generally continue. So every time that we've gone through scenarios like we're going through right now, once that drop starts, expect more of them as we go on. So that's why I think the expectation is probably one in June, and if all goes well, July and August, another one in September. And there's some economists that think the one in September might be 0.5 point. So
that's significant,
which would be awesome.
Yeah.
And then another one, the last one of the year, the last Bank of Canada announcement of the year, which would be in December, and that would be the 0.25 point. So the possibilities there. We all have to remember that pre-pandemic, our prime rate was at 3.95, and our economy was humming along. Our unemployment was very reasonable, and realistically, that's a point we want to get to. If we can get prime to 3.95, that means that the interest rates, the fixed rates, should be in the threes. And that's a comfort zone for a lot of Canadians. What Canadians don't like right now is that their mortgages are coming up for renewal, a lot of them in the twos, maybe low threes, and they're having to settle, if they take a fixed, in the very high fours or low to mid fives. And that's a dramatic change in your payment at a time when everything else is so expensive. So I think we're heading in the right direction. It's one of the reasons that I'm promoting the variable. I'm pushing the variable a little bit more. You're paying a little bit of a premium right now to go in the variable, but the reward should be there maybe as early as 6 months, but definitely within a year.
Wow. All you got to do is qualify for it.
That's right.
Well, that's the tough part. But, for a lot of people that are coming up for renewal, and again, that's the key, is that over the next 2 years, 60% of Canadians have their mortgage coming up for renewal. And these aren't the ones that are in the threes. The 60% that are coming up in the next 2 years are in the ones and low twos, because that's what the rates were during the pandemic. And these are the same people that are, if they're coming up for their first renewal, are the ones that overshot. So in other words, a house that was listed at 500, they were paying 600 for it. So they went above their means only because if the interest rates were normal, they would never have qualified for that high of a mortgage. But they were able to qualify for that high of a mortgage because the rates were at 1.5%, 1.8%, 2%. So now that the renewal is coming up, they cannot afford, and there's a lot of people that have said, if my interest rate is where it is, then I probably have to sell my house. I can't afford this house because the cost of everything else has gone up. So, and I'm not talking about Ottawa, I'm talking about all of Canada that this is going to happen in. So that's why I think that...
I mean, the whole market would collapse.
It would.
If people had to all sell at the same time. It'd be insane.
It would. So the prices wouldn't go up. The prices would plummet in the real estate market. But more importantly, the economy would absolutely tank. We'd be in such a deep recession that we probably never experienced before. So,
but interest rates would be really low.
That's right.
But that's what has to happen, is that the interest rates need to come down so that we maintain that. And because otherwise the interest rates are going to fall anyway. So they're going to fall one way or the other. They're either going to fall because there's a catastrophe and everybody's going to sell their houses, and then the economy is going to go in the dumps, or they're going to fall gradually, and I think that's their plan, is to drop them gradually over the next 2 years so that Canadians are able to stay in their homes.
Yeah, the gradual decrease will help offset some of the pent-up demand so that we don't see the big spike in prices that sort of got us to this point in the first place, right?
And it starts in the spring, right? So keep in mind, the pandemic happened March 2020. There wasn't a lot of home buying in March, April, May. It really started in June when things started to open up just a little bit. Because if I recall correctly, I mean, there wasn't even open houses. Even in 2020, there was no open houses, but people were starting to buy in the summer.
Yes.
As they realized that they were going to be home for longer and probably not going back to work, and they wanted more space because they couldn't work out of their dining room table. So we started to see the craziness in the summer. So we've got a year now to get those interest rates down enough. And that's why I think that we might see at least 3/4, maybe 1 point this year. And then by the time we get to the summer of next year, we should see another point to 1.25. And then at least when when Canadians have their mortgage coming up for maturity, and they all qualified at 4.79% back there was the qualifying rate. If we can get the rates back to where they're not going to get to 1.89, which is what many of them have, but if we can get them to 3, 3.25, 3.5, then that's a time where most Canadians will say, okay, we can stay in our homes. That's what. But
with the states lagging behind us, that gap can't get too big between Canada and the States.
So the economists talked about the fact that Canada is going to lead the way when it comes to now. If you take away shelter costs, our inflation's already at 2%.
Yeah. Right.
So as rates start to drop, the shelter number is going to start to come down on the inflation report too, because it's a year over year. So as that number comes down, we should be able to hit the 2%, maybe as early as by the end of the year, if not very early next year. So the thing that there's only one thing that's holding them back right now: real estate exploding. That's the only concern. Real estate prices exploding.
Right. Yeah.
Because if that wasn't a concern for them, I think TIF would have already started lowering rates. But that's the biggest concern he has is real estate prices exploding.
Yeah.
And when we come
because
back,
there's a lack of supply.
We'll find out if the fuse has been lit. Are we going to explode soon, Dora? 521-TALK, 521-8255. We'll be right back.
We do have some numbers for April.
Anything jump out at you? Anything shock you?
A couple of things. So let me get into it. So we usually have a very lovely, succinct report from the Ottawa Real Estate Board that's published. These are the numbers sort of from the back end that I've taken. But really, really good news for Ottawa. Our increase in volume of sales is up 9.9% for the month of April, with 1,356 resale homes. If you look at how that compares to January, the Ottawa Real Estate Board sold 553 homes. So of this year, really, really big increase. And if you are, the one thing that I thought was really interesting, if you look at April numbers, the median for April single family homes, from what I can see, is at 805 with an increase of 1.4% from April to April.
In sales?
In price point.
Okay.
In price point, and in volume of sales, 11.9%. For townhomes, we had actually a decrease in price for the month of April, and volume of sales is only up 0.2% in volume. And condo sales, they are up 18% in volume. So for rounding it all out, as a whole, the Ottawa Board is up the 9.9%.
From this time last year. And last year, the market started taking off,
That's right. From this time last year, and the market started taking off. The one thing that I think is really, really neat to talk, well, I don't know if it's neat, but it's interesting for me because I get nerdy out on these things. But year to date, prices are up in Ottawa 3%. The listings are up 25% years to date.
No surprise at that, are you?
No surprise at that. We're up 46% April to April for the listings this time around. So
interesting.
That's right.
46%.
46%.
Yeah,
46% with 2,415 new listings hitting the market in April.
Wow.
And most of those in the last 2 weeks, probably?
I think so. Most in the last 2 weeks. The beginning of April was a bit of a slow start. I think it's sort of, the beginning of March was quite active, and then we got very, very slow at the end of March. And that continued into the first couple of weeks of April. I think the weather had a lot to do with that. We had that snowfall, and we just had sort of people, cocooning up and hibernating again. And the last couple of weeks of April have been very, very busy.
So where does that put us for listings now?
Listings right now, we're still under the $4,000. Sorry, we're still under 4,000.
And how many in the last month?
24.
Well, up 46% from last year.
Yeah, but 2,400 in the last month, and yet there's 4,000 in total.
Yeah.
So there's got to be some good activity.
There's some very good activity. Well, 1,356 in number of sales.
Yeah.
Yeah.
So
really good activity. So like I said, we're up 9.9%. The one thing that is really sort of affecting the market are the townhouse resales. Townhouse resales are really, really struggling. There are an abundance of townhomes on the market. And if you look at where the sales activity has happened, not really scientifically, but looking at what has sold in the last 7 days, we're at, I think it was 74 townhomes sold in the last 7 days. And if you look at the distribution, there are, 20-some in Canada-Stittsville, 20-some in Orleans, and only 7 in Barrhaven. So Barrhaven right now has 94 active townhomes for sale, with only 7 having sold in the last.
You know what I think that is? I think people who own townhomes value them too high because of what happened 2 years ago, where they went up. Like, they probably had the largest increase was the townhouse, right?
Yeah, but now that maybe the pool is so small for people that want to buy townhomes,
I think so. I think that's what it's happening. That I think so. I think like if you get to sell your townhouse, and if you look at what the sales are, there's a 4.2% increase in volume of sales for single family homes from 580 to 760. Yet there's a 15% increase in volume of sales for single-family homes that are over $760,000. So I think if you're able to sell your townhouse, moving up and moving equity to equity is working really well. But I think that the townhome market is being really, really affected by the first-time
Yeah, I think
buyers.
It's explained by the fact that the first-time home buyers are still on the sidelines because the rates haven't come down yet.
Well, that's right.
And investors are still on the sidelines because, again, the investment property, the townhouse is a good investment property. But because they're priced so high and the interest rates are as high, they don't cash flow. So I think that's the reason for the townhomes being a little bit slower. And we might see that until interest rates come down. I think, we're probably likely in another 4-6 month period of where townhomes won't be as desirable as single homes will.
Well, but the inventory is increasing at the same rate, whether you're a single, so the increased inventory was 48% from this time last year for a single-family home, was 46.5% from this time last year for a townhouse, and up 42% for a condo. But the townhomes are the ones that do not seem to be selling.
Boy, the inventory must have really sucked last year.
It really did.
If we're up 46%.
But I mean,
we're
the
talking
numbers,
about 2,000,
that's
3,000
right.
listings for most of the last year.
Yeah, we're at 4,000 right
Yeah.
now with 600 and some rentals. And, you know, the market is active. The market is really, really active, and people are out there looking. There is an appetite for buyers, despite, you know, the affordability being lower. There's an appetite for buyers to go out and look at houses. And, you know, for the first time, and I've said this often, buyers do have the luxury of time, and they are taking their time, and they are being very particular about what they are purchasing. So a home that needs work, a home that needs TLC, a home that is a project for somebody is generally not appealing to a lot of people. The turnkey homes that are priced appropriately are selling, and they're selling in multiple offer. However, the price point, the percentage of list price to sale price remains at 98.7%. So though homes are selling at multiple offer, they're selling at about the asking price for the most
there's no
part.
more 100,000 over.
No, and I think people are afraid to do that because, you know, if you look at what happened in the last couple of years, especially, I mean, the biggest stat that I thought was shocking was new home builders. New home builders, the average sale price for a new home build in 2024 year to date, it's down 9% as 630 from the 692 from 2023, and then a whopping 835,000 was the average sale price of a new home in 2022. So we're down considerably. And so I think people are really afraid to overpay for a house or have the perception that they're overpaying for the
Or
house.
they wouldn't qualify if they paid that much.
Goodness, no, not at all. Not at all. So it's a very dynamic market right now. Certain neighborhoods are selling better than others. Certain types of homes are selling better than others. And all homes that are priced appropriately and look great are getting a lot of attention.
Because when homes were selling for 50,000, 100,000, 150,000 over list, interest rates were super low, right?
There was still a worry. I mean, for us, I mean, here we are, we're giving approval letters so that they can include them as part of their purchase agreement. And yet, you know, I'm putting a warning to the client saying that I get it, that you're buying it for $100,000 over, but just be prepared to come up with more down payment, because if the lender determines that you've overpaid for the house, they're going to lend based on what they think the value of that home is and not what you're paying for it. So you just need to be prepared. So for us, it was a very scary time. I'm glad we're not in those times anymore. I'm glad that there's financing conditions. And listen, the financing conditions in some cases need to be 7 days. It all depends on the circumstances of the property. But in your tract home, your typical tract home, a lot of lenders, and you know, I said I was at the Scotiabank conference, the VP there just sat with me and said, like, would you guys be opposed to more automatic valuation instead of getting appraisals done? And of course, we all said, of course, we'd love that. Like, the less appraisals we get done, the better. If you can auto-valuate them, it makes a lot more sense. So I think the banks are starting to lean back towards doing more auto-valuations. They've been a little nervous
On
about
cookie-cutter homes, though, right?
On cookie-cutter. But, you know, if you're in, you know, small subdivisions where there's 5 or 6 homes there and it's outskirts a little bit, the chances are still that they're going to want an appraisal. If it's a property on well and septic, a lot of lenders don't do the auto valuation.
There's such a big swing there, right?
There is.
Like if the well and septic are not in good condition when you purchase the house,
20, 30 grand.
Well, it's 30 to 60 for septic right now.
Yeah.
So that's a really big swing for that. But as someone who is on the real estate side, the 7 days versus 5 days for financing is a bit tricky.
It is.
It is a bit tricky. So we're trying to
manage
manage
off the market,
that.
Right?
It takes it off the market. It takes the momentum away, and you really have to do your homework and make sure that when you're speaking to the buying agent, that you have the pre-approval letter. And you know, I mean, Frank can talk about this in more detail, but there are 2 parts of the pre-approval. One, the person needs to be approved. Second, the property needs to be pre-approved for that amount. And so when you have the 5 versus 7 days, you really, really are affecting the seller. And you've got to be careful from the listing side what you do there. So it would be so wonderful for us if you could have the reappraisals done faster.
Yeah,
And
right now.
Frank can't talk about it now. We have to break.
Okay.
Oh, okay. We were just getting into it.
521-TALK, 521-8255. We'll be right back.
Sometimes a day or two, other times 5 days. It all depends on the scenario. The most important part about a pre-approval is getting the documents before you even start looking at properties. So if we can get all the documentation, whether it's your first home that you're buying, then we need the down payment. But if you're buying one and you're selling another one, then all we need is the mortgage statement for the current house that you have. And even if you haven't sold it yet, at least we know what the figures are going to look like approximately, and we can be very conservative. But if we have all your income stuff, so again, too many occasions, we used to be able to get away with approximate income. So if somebody says they make $80,000, make $80,000. Let's do the calculations. But it's incredible how many people tell me they make $80,000, and then when you get their pay stubs and their T4s, they made 76, and they're gonna make 80. Well, you never get approved on what you're gonna make. You only get approved on what you're actually making right now. So even on salary,
and what you actually show too,
and
right?
what you actually show. It's all about what's on paper. Or you get people that are on commission and they tell you they're making 150, and they may have made 150 in commissions, but then they write off everything and they only net 65, and all of a sudden you don't qualify on the 150, you qualify on the 65. So again, that's why it's so important if you really want to go out, and with most customers that I talk to, what I say to them is I say, listen, if you get me all the paperwork, then you're going to be in a really strong position that when you see the house you love, and I know it's not like it used to be 2 years ago where you had to make the offer while you're in the driveway, but you'll be able to sleep on it and at least know the finances that come with it. And in some cases, I said, if you want, email me the MLS feature sheet. Tell me what you think you're going to pay for it, and I'll run the numbers for you so that when you're making that offer, you know exactly what your financing is going to cost you and whether it's within the range that you're comfortable with moving forward.
I think that's a brilliant idea, and I do think that having the time to sleep on it for 80-75% of homes, true. For the 20% that are really, really showing well, people are making offers within hours of it being.
But
for
that's
sale.
okay if you have a financing and home inspection
That's
clause.
right. That's right.
It's the difference from 2 years
That's
ago
right. It's not
where
firm.
you were making it and it's firm. It's like, and
That's
then you
right.
sleep on it and you say, oh, maybe, well, you can't.
Yeah.
Yeah.
You're in it.
But you have to know what your pre-approval is.
You do.
You got to know what your ceiling is too, going in, because if you want to offer more,
Yeah.
you better know you're approved for it.
And I think you've got to be honest about your other debt, right? Where we have people who come and meet with us and they say, I think, Lou, doing the online thing, I qualify at this number. But I'm like, well, do you have a car debt? Do you have credit card debt? And go speak to a mortgage broker and really get a clear idea of what you can.
Yeah, doing the
afford.
online thing, if you're seriously looking for a house, not a good idea.
No, I think you need to
it's not
talk to
worth-
somebody
yes, absolutely.
because again, I mean, the online, and listen, all these banks promote, we'll get you pre-approved in a minute, whatever. I mean, it doesn't happen that way. Even though your credit score might be there, there's other factors that come into play. And as much as everybody's worried about AI will not replace a human being, whether it comes to real estate, whether it comes to mortgage brokering, whether it comes to lawyers. AI will do a whole bunch of things. It will not replace that human touch that I think is needed in certain things like getting a mortgage, like selling your house. AI will help.
too many
I don't know,
questions.
but
Too
I
many
don't know that
questions.
AI is also empathetic, right? Like each one
Either
of
are
our,
the banks.
True. But each one of the people we deal with is a human being, and everyone has a different story. And so you've got to identify, what their gaps are. Is it that they don't have enough down payment? Is it that they can't make the payments? Did they have, a bumpy credit history? Do they need to move because of family reasons? Those are all things that really come into play when you're looking to buy a house.
But if you're serious, there's no such thing as a soft approval. You can't say, "Hey, Frank, I make $100,000. What do I qualify for?"
People do it, though.
They
People
do.
think they can do it
Yeah,
and
but
they can
then
get
they're
away with
disappointed
it.
afterwards.
They might be. I mean, they won't be if they're really solid and strong. They won't be.
Like, what paperwork do you need before you can actually evaluate whether or not
Salaried, it's easy. It's either a T4 from last year, so any of the three, well, no, usually most of the three today, but a T4 from last year, a letter from your HR department confirming what you do, and a pay stub, most recent pay stub. Those are the three if you're salaried.
and then your debts.
And
Do you go back a couple of years, Frank? On
Well,
a
it
T4?
depends. Not on a salaried, we don't need to because
Okay.
it's a straight salary. Where we have to go back 2 years is if you're on commission, if you're part-time, not guaranteed hours. So in other words, some people say I'm guaranteed 20 hours, but I work 30 every week. Well, for me to use the 30, I need to see that you've got a 2-year history of making X amount. Otherwise, you can't tell me you work 30 because your guarantee is only 20, so we got to use the 20.
And that happens in couple situations, I guess, where one is working full-time, one is part-time, and you need both salaries.
We're seeing a lot of, unfortunately, and again, it's people trying to get ahead. You've got people working a full-time and a part-time job. That's what we're seeing. For people young people that want to get into houses, they know that they need to make more money, and they know that they need to save as much money as possible. So what we're seeing is a lot of them that have their full-time jobs during the week, and then they're taking on that Friday night, Saturday job, or Saturday, Sunday job where they're working, 10, 12 hours and they're making X amount and they're guaranteed that. And that's the key, is the guaranteed hours. So, a lot of people say, well, work part-time. What are your hours? I don't know. 1 week there's 3, another week there's 12, another week there's 10. Well, then you got to have 2 years history for it to count as your income. But if there's a guarantee in there, and that's the key, there's a guarantee. Probation is sticky sometimes depending on the company you're working for. If you're working for the government, it's an automatic 1-year probation, but most lenders override that. But if you're working for a smaller, unknown company, then the probation could be sticky as well.
And if you're salaried, how many years?
Oh, salaried, it could be 6 months if you're not on
Really?
probation. Yeah, the lane
with the letter of employment, I guess.
The probation's kind of a little bit of a joke too, like if you really look at it, because even if someone's on probation, they cannot be let go without cause. You can't let them go just because they're on probation. So I often have that argument with the lenders. It's like, why are you so caught up on the probation part? Because really, the only thing that changes is if you're being let go on cause, whether you're working there 20 years or 6 months, it's the severance. Well, if it's on cause, there's no severance. But if they're letting you go because they're shutting down or they're laying off, then it's the severance that matters. Because apart from that, they can't let you go anyway. So,
how solid is the paperwork for your buyers, Dora? Is that a tough conversation for you to go, look, did you actually get qualified?
It can be awkward, but it's a necessity, right? We can't go looking at houses. We can't start writing offers. We can't do anything until I know that your finances are solid. I mean, it's the very, very first thing that you have to do. So give someone like Frank a call and get going, because there's nothing worse than going out with buyers and they look at homes that are, beautiful and these great big trees or have pools and have all this stuff. And then that's what they think their baseline is going to be. And then they go to speak to a mortgage broker and they actually qualify for $150,000 less. And then now you are chasing that house that you saw that you couldn't have afforded in the first place.
So you've wasted the buyers and the sellers.
Absolutely. Absolutely. And for a seller,
not to mention the poor agent.
Yeah, no, it's really, really important to get pre-qualified first.
And do you get that on paper?
What, the pre-qualified? Yeah, usually. I mean, by then we've done the credit check, we've looked at the income, we've done the number crunching. It gets difficult when there's older people sometimes, your age, Steve, that have solid net worths. Solid net worths. So they've got lots of money in RSPs, lots of money saved, they've got lots of equity, but no income. And if you don't have any income, you can't get a mortgage unless there's a couple of net equity programs. If you're talking about traditional lending, I mean, you can get private lending, but that's more expensive. But if you're looking for
if I have $1 million in equity, I can't get a mortgage on that?
Not if you're not working. If you're working an hour a week like you are, well, you might
in a row.
You might be able to get a mortgage for $8,000 if you want a mortgage for $8,000. But no, the rule of thumb is 4 times your income. That's the rule of thumb. If you have normal debt, and what I mean by normal debt is a small credit card, maybe a car loan that's reasonable, not a $1,800 a month car loan. But if you have just normal, maybe a small loan and a credit card and a car loan, take your annual income on paper, not what you think you make or what you're gonna make, but what you've made.
The gross now.
And yes, the gross, and multiply it by 4, and that's how much of a mortgage you can get. So if your income is $80,000. You can get a mortgage for $320,000. So for older individuals, they're on pension, right? So their pension counts, right? So it's your gross pension amount. It counts, but for a lot of those scenarios, they've got so much equity anyway that the lenders are willing to stretch the ratios, stretch the GDS and TDS in those scenarios because the risk is very minimal.
Right.
And you can still get a mortgage for as long as you want.
Still got a 30-year mortgage. We're starting to see more of that. We're starting to see 50, 55, 60-year-old people that their mortgage coming up for renewal and the interest rate has gone up. Now, you got to make it all relative, right? So a lot of these clients now have $200,000 mortgages or $100,000 mortgage renewal, but their house is now worth $900,000.
Right.
Yeah.
So, I think they're okay to take a 25 or 30-year amortization, and they've just come to terms with the fact that we're not going to pay off the mortgage even though we're about to retire or we've retired already. But we're going to keep our payments as minimal as possible so we can continue to stay in this house.
So if you have 10 years left, can you go back to 25?
Yes.
You have to
can.
requalify, yes?
Yeah, well, you got to requalify. So on a renewal, you need to requalify for sure.
Yeah.
So they take your income. That's why a lot of people call me and say, Frank, I'm retiring next year. Which way should I structure my mortgage? So I always say structure it for the higher amortization for now. And then if you want to put extra money while you're still working for the next year, just take advantage of the prepayment privileges that come with the mortgage and pay it down that way. And then once you retire, then you'll still continue to have that lower payment.
Are you seeing a lot of older people selling homes now?
I'm seeing a lot of older people selling homes to help younger people buy homes.
Oh, really?
Yeah. So a lot of...
So moving down to a condo, say, and then helping the kids out?
That's right. Or moving in with the kids. So having, I know...
Well, you
payback. It's payback.
That's right.
Kids are living with their parents till they're 40 now.
Yeah.
Why would you want
cyclical.
Why would you want to go back to that again?
Because it's payback.
That's
payback.
right.
Then,
right.
then the parents are going to leave the lights on while
That's
they're
right.
right?
And the
They're gonna
fridge
do the same
open,
thing, yes.
the dishes out, and
That's
all
the
sorts
fun
of things.
part. Yep.
That's right.
521-TALK, 521-8255. We'll be right back.
Use the drone a lot, eh? Like is the drone? Do people get offended by the drone? I know there's some people out there that you're infringing on their privacy if you're in the air. And
I've been flying the drone for 15, 16 years, and probably had 3 run-ins maybe with fussy neighbors.
But
yeah,
the pictures are
that
fantastic.
bedroom hovering is terrible.
Yeah. No, but the pictures are fantastic for the sellers. The pictures
Depending
are
on the home,
fantastic.
right? So you don't always need a drone.
That's right. You don't always need a drone, but depending on the home, depending on the size of the yard, depending on the amenities around, Greg does a really, really good job of showcasing that.
Is that a good idea too, to show the neighborhood? Like, here's how close the parks are.
This is a better question for Dora. My answer to that would be no. My goal in the photos is to get people interested enough in the house to get there. Once they're in the neighborhood, they're going to see the stuff in the neighborhood.
It'd be kind of neat,
that's
though, if the school is close or there's a park close by or water close by.
Well, I mean, that's the job of the buyer agent and the job of the listing agent, right? To make sure that everyone out there knows what the benefits of that house are. I mean, it's our job to highlight the positives of every single house, and having, people will purchase a home based on school catchment areas, based on bus routes, based on all sorts of things. So there's a lot of information there above and beyond the number of bedrooms, the number of garage spaces, and that sort of thing.
Yeah.
Well, you got to be
buying
careful
a lifestyle,
too.
Right?
You got to be careful with the drone, right?
Yes.
Because I mean, if you go up above and you've got a neighbor like Paul who's in a Speedo sitting by the pool, it could deter somebody buying that house.
You're lucky
real
if he's
quickly.
in a Speedo.
Yeah, real quickly.
You know what does deter people, which is unfortunate, is neighbors who smoke, particularly in townhomes. And you can't really control that, right? And you try to explain that to the buyers. Well, the person next door that is smoking could move out, and a non-smoker can move in the next day. But smoking is a big, tricky thing in real estate these days.
People are too picky.
Well, they can be,
coming
right?
from a smoker, of course.
Yeah, that's right. They can be. I mean, buyers have control for the first time in a long time, and they have the ability to say, well, this one doesn't quite click every box or check every box. I'm going to wait for the next one to come, because the inventory is coming, and it's coming, and it's coming.
Speaking of buyers, I'm reading articles now that say you should probably get into the market now before the rates come down, because there may end up being a bit of a frenzy.
Well, I mean, that's what we've been saying. If you've been listening to the show, we've been saying that in November.
That's what I need to do.
That's right. That's right. When in November and December, that was a really good time to buy. Yes, there was less inventory, but gosh, if you found a house that you liked, it was a fantastic time to buy. Same with now. The prices are going to change, and the activity, people come out in the spring and they start looking for houses in the spring, but the inventory is also going to go up, right? The inventory is going to go up because sellers are taking advantage of attractive environment for buyers. There are people who are selling because they can no longer afford their homes, and there are people who are selling just because of seasonality. But I mean, the reality is that when we hear from the media that the interest rates are coming down, there are people who are going to feel confident and are go out and going to buy. And that's going to probably push the prices up a little bit. I think that the reality is that the 0.25, 0.5% decrease isn't really going to change the affordability for a lot of people. So we may not see such a drastic increase in price, but it's going to change the prices for sure.
Every quarter point helps a bit with qualifying, though, right?
It just does, but it's more than a quarter point. Like for first-time home buyers, a quarter point's not going to swing them.
That's right.
So I'm not convinced that that first quarter point will create a frenzy. I think
attitude will.
But
change.
it does change.
I think the attitude,
change
like
the
the feeling,
right? That's right.
Wow,
Well, it's like positive.
Direction.
Yeah, the attitude. Yeah. The attitude will change, and I think more people will be out there, and more people will be willing to sort of take the risk. Not really a risk, but sort of subjectively
take
thinking,
the jump.
That's right. Take the jump and think, okay, if I get into home ownership now, I believe the interest rates are going to continue to come down. I'm doing it.
Yeah. But only if you take a variable, right? If you take a fixed, then you're locking in at that rate and you're stuck at that rate. And in some cases, some people have to take the fixed because they won't qualify on the variable until that prime rate comes down a little bit more. So it'll be interesting to see. But
has a drop been factored in yet in the fixed rates?
No, not at all. Actually, this week, for the first week in a long time, we saw bond markets come down. We've really seen bond markets go up over the last 6-8 weeks, mainly because of what's going on south of the border where the economy is very strong. But at the end of the day, I think that, Canadians can sit tight. And if you're looking to buy, if you buy in the fall you can buy in the summer, but if you can qualify for a variable rate, take that because you'll benefit from the interest rates coming down, as we head into the end of 2024 and into 25 and 26.
Birthdays?
My little brother celebrated his birthday yesterday, so it was last year in his 50s. So for my little brother, so happy birthday to Enzo. And Vincenzo. And I want to send out prayers and thoughts to our friends of the show, and a competitor of mine, but a good friend of mine nonetheless, Adam and Angie, who are going through some tough times with their little boy. So it'll work out. Lots of prayers for them.
Dora?
I got nothing.
Not a birthday, not a wave to Paul, nothing.
Oh, yeah. Hi, Paul.
Let's say happy birthday to Paul for the third week in a row. And for the...
he's in his 51st year
Yes,
now?
he is in his 51st
year.
He
must feel old.
Steve, what shows this? 8 what?
846, I believe.
Wow. So 844 for you.
Yeah.
Probably about 700 for me.
Yeah, and 23 for Paul.
No, Paul might hit number 400 maybe when he's here next. So
that's right.
Have a great week, everybody.
Support local business and charities, everyone.
Take care.